Yo, what is good, guys? Yo, we got the chat here. What is good, guys? How's it going? This is crazy. We got 50 people here already. This is absolutely mental. Let me just make an announcement in the Discord server, letting everyone know that we're live. This is crazy. How is everyone doing? Nice to see everyone here. Good afternoon, Mike, Ghost, Abby, Big Deeds, Little Legs, Gustavo, Dan, Alex, Elizabeth, Orderflow, Chess, Emma, Scott. Good afternoon. How's it going, everyone? Good evening, Asif. This is crazy. Like up the stream if you're ready for this, guys. Let me just make the announcement in the Discord. This is the biggest lecture, the biggest value, the most value I've ever given away, the biggest giveaway I've ever done. This is going to be absolutely mental, and we need to hit 100 viewers whilst live in order to unlock that giveaway. Give me one moment, guys. Just making the announcement in the Discord that we are now live. All right, let's get it, guys. How's it going, everyone? This is crazy. Like up the stream if you're hyped for this. Laura, Big Deeds, Artem, Vicky, Martin, Leon, Tobias, Justin. How's it going, guys? Good morning, good afternoon, good evening, wherever you are. I hope you're having a brilliant day and you're ready to master AMD, IFVGs, liquidity, and daily bias. In this lecture specifically, what we're going to be covering is daily bias. And then once we've covered that, we literally just bring everything together. I show you how to use it on the markets. Then we discuss psychology, and psychology is very, very boring. I know it's very boring, but it's got to be discussed. Now we're not going to be touching the basics. It's not basic stuff. We're not going to be learning FOMO and greed. We already know that basic stuff, right? We're going to be looking at metacognition, decision fatigue, behavioral adaptability, and a bunch of other, like a few other stuff, bits and pieces here and there, about 3-4 different topics in psychology. It's not the basic stuff. This is how you're going to master your psychology, okay? And we got a nice message at the end, but we got the biggest lecture I've ever done live, the biggest giveaway I've ever done. This is absolutely mental. Like up the stream if you're ready to get started. Like up the stream. Guys, this is absolutely mental. Let me look on YouTube how many likes we got at the moment. This is crazy. 73 viewers like this stream. We're about to get started, guys, okay? Just give me 1 sec. I just need to shut my window because it's absolutely freezing. Excuse me, I just had to shut the window in my office. Right, 80 people here. This is absolutely mental. Like up the stream if you're ready to get started. 60 likes already. This is crazy work, guys. Crazy work. This is absolutely mental. If we hit 100 viewers whilst live, we unlock the giveaway, okay? We're about to get started now. If we hit 100 people whilst live, the giveaway is unlocked. Over 20. So many people are winning today, okay? It's not a 5K, it's not a 10K, it's not a 50K, it's not 100, it's not 200. It's bigger than a 200K account. Over 20 people are winning it today. Everyone's winning it, near enough. And all we have to do is hit 100 viewers whilst live and like the stream. We're about to get started now, guys, okay? Jovan, nice to see you here. You were the winner of the funded account last time. And Little Legs, if you're here, you won the course on the first lecture. We've come a long way, guys. We've been doing this since, I think it was, the 30th? Or the 28th? Something like that. We've been here a while. Let's get it, guys. Okay. This is crazy. Like up the stream if you're ready. We're about to get started now, okay? We're getting started, okay? Let's go, let's go. Right, let's get it, guys, okay? Let's get it. So, what are we going to cover today? I've already kind of touched on this, and you've probably seen it in the announcements that I've been making, what we're going to be covering today. Let me just move my mic a little bit. And, you know, it's basically daily bias. That's what we're going to be learning today. The missing piece of everything I've taught you. I've shown you liquidity, I've shown you AMD, I've shown you fair value gaps. All you need to do now really is combine it with the right bias, the right direction to trade in, and then you'll have near enough a winning strategy, okay? So we're covering daily bias. We're then combining all those things into one strategy. I'm going to be showing you an example of how to do that. Then we go on to advanced psychology, okay? As I said, it's not the baby stuff. We're not looking at FOMO. We're not looking at greed. We're looking at metacognition, behavioral adaptability. What else was it? Decision fatigue. And then, you know, I got a nice message for you at the end. There's a nice paragraph for you to read. And then we go with some real-time chart examples. And, you know, I would be showing you actual trades, but we're doing it on a Sunday. Plus, I'm in a break of trading. I'm not trading until the 21st. And we've also got the biggest giveaway ever. So, quick recap of what we're doing today. Daily bias, combining liquidity, everything I've taught you together. Then we're learning psychology, and then we're going to go over a couple examples. Then we're going to do the biggest giveaway ever if we hit 100 viewers whilst live. Right now, we are on 92 viewers, which is absolutely mental. Like up this stream, guys. We're about to get right into this, okay? So, first, we need to do a quick recap to make sure everyone's on the same page. Very, very quickly, we just need to discuss what we discussed in Lecture 1, then Lecture 2, and then we move on to daily bias. So, what happened in Lecture 1, okay? So, in Lecture 1, we started with looking at highs and lows and actual moves, yeah? And then we moved on to looking at liquidity. That's what the whole aspect of Lecture 1 was about. We looked at liquidity. Liquidity is the market's fuel. We know that. We know that institutions manipulate buy-side and sell-side liquidity. You know, they do stop hunts, they do manipulation, do liquidity sweeps. And we looked at ARL and IRL. That was probably the main aspect of this lecture, was ARL and IRL. So I'm pretty sure that more than Man United, exactly. I'm pretty sure, right, that everyone here knows exactly what ARL and IRL is, okay? So that's the basics, the basic baby stuff. We've covered that now. We know exactly what that is. We know how to apply it onto the markets. All we need to do now is basically bring those things together. We looked at AMD, and then we looked at AMD and moved those two things together, combined those two things together. We looked at AMD, how institutions use AMD to move price with the manipulation phase and the distribution phase. Then we identified AMD phases to align with market intent. So, for example, we looked at if there's a distribution through Asian session, we're probably going to expand through London. And if we distribute through New York, we're probably going to accumulate through Asian, okay? Now, you know what AMD is, you know what ARL and IRL is, and we combine those two things kind of together, yeah? We in that lecture, we kind of combine those two things together in order to actually start taking trades. Now we need to bring everything together and basically build the actual strategy, and then it's all about how much you can apply it, how well you can apply this trading strategy, okay? So that's lecture 1 and lecture 2 recap out the way. Now we're moving on to new uncharted territory, stuff we haven't discussed yet on these live lectures, okay? And that is daily bias. So daily bias is very, very simple, but what is it? First of all, we need one man them on the live stream. Yeah, we do. Like up the stream, guys, share the stream, whatever it is you need to do. Like, share, subscribe, spam in the chat. Whatever it is you need to do to get more people in here, do it. Once we hit 100, we unlock the biggest giveaway I've ever done, okay? But what is the daily bias? So, daily bias is a roadmap to predict market direction for the day. That's all it is. You can have a longer term bias. You know, like you can be bearish on a market, like a lot of people are bullish on Bitcoin now. That's not a daily bias. That's like a very long-term bias. A lot of people are long-term bearish on, long-term bullish on crypto. That's not a daily bias. A daily bias is what you look at for that specific day, for that specific session that you are trading. It's a daily or it's a session bias. It's got two names. And what you need to do is you need to align those trades. Once you've found your bias, you align the trades with the institutional intent and the session timing in order to actually win most of the trades, okay? Now, I think one thing is a lot of people struggle with daily bias because they struggle with the actual concept of ARL and IRL. Now, all daily bias is using ARL and IRL. To establish a daily bias, which I'm going to show you in a minute, is simply just using the daily and the 4-hour ARL and IRL. Now, there are slightly different rules to the ARL and IRL and how you identify the direction the market's going to go in, and I'm going to show you that because obviously price can consolidate. That's one thing that a lot of people have struggled with. Like, how do you actually use ARL and IRL during a consolidation? We know that it's an accumulation phase of AMD, but how do we actually deal with ARL and IRL in terms of a consolidation? And that's one thing a lot of people are going to struggle with. When I'm going to show you how to identify a daily bias, but one thing that will be difficult for you is actually using that daily bias in a consolidation phase, in an accumulation phase on the higher time frames, and I'm going to show you exactly how to deal with that as well. That's probably going to be one of the biggest learning points of this lecture, regardless of psychology. So we're going to be looking at that as well. But basically, what you want to do for daily bias is identify liquidity zones, fair value gaps, and simply put, just use ARL and IRL. I'm going to show you a few examples of what I mean and a few examples of how consolidations work, okay? So let's just jump straight onto the charts. This is the daily bias example. So we just got GBP, JPY, and we can do this on a bunch of different time frames. Oh, shit. We almost at 100. 100. Oh, shit. 102. Get in, guys. This is crazy. Oh, my days. 102. This is absolutely mental. 100 viewers whilst live. This is crazy. Oh, my days. Let's see. Let me just refresh on my phone. 103 viewers. This is absolutely mental, guys. This is absolutely crazy work. Oh, my days. Well done. So, yeah, we have officially unlocked the giveaway, as I was about to show you daily bias. Now, in terms of the giveaway, we're going to be doing that at the end. You've unlocked it now. It is happening. It's a thing. All you need to do to win is stay in this stream. At the end of the stream, I'm going to be showing you exactly what the giveaway is. And you need, basically, to win, you need to stay in this stream if you want to get access to it, okay? 103 people whilst live. This is crazy, guys. That's a record for me. I'm very happy with that. That's crazy. Let's see how we can maintain this. W's in the chat, guys. W's in the chat. We've just on 107. It just keeps on going up. This is absolutely mental. Still going, guys. This is crazy. Oh, my days. Spam W in the chat, guys. W in the chat. This is mental. We've unlocked the giveaway now, okay? We've unlocked the giveaway. We're going to be discussing what the giveaway is at the end of this lecture, okay? We've got it now. W in the chat. This is crazy. Yes, guys, this is absolutely mental. Oh, my days. Wow. Let's get it, guys. W in the chat. This is crazy. Yes. Oh, my days. Oh, this is cool, guys. This is why I do this shit, you know. This is why I do it. This is mental. Oh, my days. Wow. W in the chat. The giveaway will be done and decided and announced at the end of this stream, okay? Exactly how we did with all the other giveaways. We're going to be discussing what it is at the end of this stream. This stream shouldn't take too long, probably about an hour. Probably got an hour left, maybe, because it's not much to discuss. These W's are crazy, guys. Still going. Oh, my days. Oh, my days. W in the chat. You're buzzing about this giveaway. Over 20 people. Hundreds of people probably. Like, so many people are winning this giveaway. It's going to be mental, guys, okay? It's the biggest one I've ever done. You're going to be getting the most back from me in time for the course rebuild. It's going to be absolutely mental. W's in the chat. This is crazy. Right. Let's carry on with the lecture, right, guys? Okay. So, the giveaway will be announced, decided at the end of this stream, okay? So, if you want to know what the giveaway is, you want to know how to win, all you need to do is stay to the end of the stream, and that's where we're going to discuss everything about the giveaway, okay? Exactly how we did with the first, second lecture. Everything to do with this giveaway is going to be at the end of the stream, okay? But let's move on to this is crazy. Still going with the W's. Oh, my days. This is mental. Okay, right. We're going to be moving on to the daily bias, all right? We're going to be learning exactly what daily bias is. This is crazy, guys. Oh, I'm so happy about this, you know. This is so crazy. Oh, guys, this is so cool, right? Let's get it. Okay, let's move on now to the daily bias, okay? We're going to move on now. Daily bias. Let's learn what daily bias is, okay? Let's stay focused on the goal of this stream, and that is to learn what daily bias is, and psychology, obviously, but we're going to be moving on to daily bias now, okay? So, as I said, the steps to establish a daily bias is simply just go to the daily and the 4-hour time frame, and then use ARL and IRL on that time frame. But there are a few issues with when price is consolidating. Like you can see here, we kind of had a consolidation. How does this work with ARL and IRL? How does this work here? You know, there's consolidations all over the place. And I'm going to show you exactly how they work, okay? Why they're important. But, yeah, let's get into it. So, daily bias. Okay, note making time, guys. Okay, note making time. Daily bias. How do you find a daily bias? So the first thing you want to write down for when you're identifying your daily bias is simply go to the daily and the 4-hour time frame. Okay, they're the two time frames you want to use for your daily bias. You don't want to use any other time frames. Now, sometimes you may go up a time frame to like the weekly, the monthly, and identify using that method, which I'm going to show you in a minute as well. But typically, the rule of thumb is to use the daily and the 4-hour, hence the name, the daily bias. Use the daily candles and the 4-hour candles, okay, guys? So you go to the daily, you go to the 4-hour chart, and you simply start at the most recent swing level. So go back to the most recent swing level. And work your way forward to current price action. Using ARL, IRL. Still spamming W, guys. This is mental. Right. Okay. So, how does this work? I'm going to show you a diagram, a perfect, perfect world example of me drawing it out, and then I'm going to show you exactly what I mean on the chart. So we go to the daily time frame, and the daily time frame would look something like this. So we have a nice downwards move, whatever it is. Okay. And the daily has just swept this liquidity and formed an imbalance over here. Okay, let's just say hypothetically that's what's just happened. Okay, excuse me. Right, so we go to the daily, we go to the 4-hour. On the daily, we see this. So this is the daily time frame. On the daily, we see this downwards trend. Okay, we go back to the most recent swing level, which let's just hypothetically say is this one. And if you don't know what swing levels are, they're basically the start of the moves ups and down. Okay, so when you see a downtrend, the swing levels are the top and bottom. When you see an uptrend, it's the same thing. It's the top and the bottom. Now, you have all these internal highs and lows, which are ARL, yeah? But you have the swing levels, which are the start and finish of each of these trends, okay? So let's just say that we started a downtrend after this uptrend here, okay? So this is the swing high, yeah? So we go back to the most recent swing level, which in this case is the swing high, and then you work your way forward to current price action using ARL and IRL. So you go, okay, well, price almost took out this low. It didn't. It retraced to the fair value gap, respected that, then took out the low, then came back to the next imbalance, took out the low again, came back to an imbalance, took out the low again, came back to an imbalance, respected it, and then took out this low right here, okay? So we've worked. The reason I get you to go back to the most recent swing level, by the way, guys, is simply just because a lot of people struggle with actually where to start with identifying ARL and IRL, okay? And the easiest place to do it from is the swing level. So a few people struggle with actually where to start because we know highs, and we know what ARL, IRL is. We know it's lows, highs, and fair value gaps, but a lot of people struggle with actually where to start, a starting point, a reference point for actually identifying what the next move will be. You can go back to the most recent fair value gap, but the easiest way to do it is go back to the most recent swing level, work your way forward, because this will build up your skill of actually using this concept. Once you're on, my level or some people in the courses level, you don't really need to do this, but as I said, when you're starting out learning what this is and applying this on the charts, you want to go back to the most recent swing level and work your way forward. So we've worked our way forward, yeah, and now we've picked up that price has just took out this low, okay? Price has just took... What's going on with these charts? Let's just go back over here. Let's go over here. Okay. So prices just took out this low, guys. Yeah. We got liquidity right here. And now I want you to answer this in the chat for me, okay? So prices just took out a low on the daily time frame. Do you think the next move is going to be bullish or bearish? What have we got to do? Have we got to go? Do we go down? Do we continue the trend? Is this a break of structure? Do we leave behind this fair value gap? Or do we retrace back to it before actually having any sort of continuation? What's the next move, guys? Is the next move likely to be bullish or bearish? Answer in the chat. Do you think the next move will be bullish or bearish? What have we got to do? Look at this trend. We take lows, come back to fair value gaps. It's simple ARL and IRL. Do you think price is going to go bullish or bearish? Comment in the chat, bullish or bearish. Okay, a few people said bearish. But yeah, the majority are saying bullish. Exactly. Terence, bullish move up to go down bearish. Now, with that, Terence, we may not go down bearish, but we have got to have a bullish move first. So the answer is bullish. The answer is bullish, guys. That is correct. Everyone, near enough. Few people said bearish. Now, we may continue the trend down. Okay, we may continue down like this. And that is bearish. But we've got to have this retracement first, okay? We've got to have the retracement. Because in order to continue the trend, we got to retrace. But also, it's simple ARL and IRL. We take out liquidity, then we go back to fair value gaps, okay? The exact same thing we did on this whole move down. We take out a low or a high. In this example, we take out a low, then we retrace back to the fair value gap. Retracing back to the fair value gap in this example is bullish, okay? So then we go, well, if the next move on the daily time frame is bullish, it might just be the smallest bullish retracement ever. Like, it literally might just even just be like this, like literally just this, and then continuing down. But that means for that day, we're expecting the next few candles to be bullish. Because if we use ARL and IRL, we know that price is going to go bullish for the next few candles. Then we go, okay, well, this is the daily time frame. So if the next few candles on the daily time frame are supposed to be bullish, that means that the bias is bullish. Or in other words, the next few daily candles will be bullish. Or in other words, the next few days will be bullish, okay? The reason it's bullish is because we took out the low, so we retrace back to a bearish fair value gap. And that's it. Now, from there, from that point, we don't care what can happen after it at that moment in time. We don't care if we respect it and continue down. We might do that, and that will be bearish. We may then obviously push straight through and be bullish, taking out this high, etc. We don't care what's going to happen once we get to the fair value gap. All we know is that we've got to come back to the bearish fair value gap now. And in order to come back to the bearish fair value gap, what have we got to do? We've got to have a move up, okay? So the next few candles will be bullish. In other words, the next few daily candles will be bullish. And then you can put that down or funnel that down and go, basically, the next few days will be bullish, okay? So that gives us our bullish bias, and that is literally it. Now, you want to basically go to the 4 hour and confirm this. So, write this down. Once you've identified the next ARL, IRL move on the daily time frame, excuse me, you want to go to the 4 hour, okay? And apply the same concept there, okay? And this is where the bias part of it comes into it, because we know that the daily is going to be bullish, okay? We know the next few daily candles will be bullish, or they're supposed to be bullish. But what we want to identify is then kind of like the session bias, because, okay, well, if the day can be bullish, but what about the time that I want to trade? So whatever time of day it is that you log on to the charts, It can be Asian session, London session, New York session. I don't care. Whatever time frame it is that you log on, you don't just want to look at the daily and go, okay, well, the daily's bullish. And this is the thing, because if you log on, okay, let's say you trade Asian session, you log on, you see that the bias is bullish, yeah? Then someone else in New York session sees that the bias is bullish as well. And then someone in London session sees that the bias is bullish. If you just use the daily candle, that means that we will be bullish in Asian, bullish in London, bullish in New York. And you should know for a fact the price just does not work like this. It just doesn't go straight up or straight down. And when it does, it's more than likely a fake out or a retracement's due. So when we push straight down or straight up, it's pretty unsustainable, and it's pretty rare that this will actually happen as well. So then we go, well, if it's pretty rare that we actually push straight up or straight down, we can't really conclude that this is the bias we want to look at all day, can we? We can't go, we just want to take bias all day, because all the price is going to do is go up and up and up and up and up and up and up. We don't know that for certain, and also it's not really reliable to trade that. So what we want to actually look at is the session bias that we're going to trade. So when you log on, if it's London, if it's New York, you might be looking at a different 4-hour candle, and that's perfectly fine. But all you need to do is apply the ERL and IRL concept on the 4-hour time frame, okay? And what that will do is that will give you that bias for that session. For example, okay, so we know that daily's bullish, okay? So daily equals bullish. We go to the 4-hour, and we see that the 4-hour candle has just took a high out, which means it's technically bearish there, okay? So if it's bullish and bearish, well, it's kind of mixed. Okay, mixed bias. And in that case, you can kind of just trade in any direction. And that, you know, that kind of defeats the point of finding the bias. But this is why you want to look for the bias, because what will happen is you'll know that the daily bias is bullish. Yeah, if you just looked at the daily bias, or if you just didn't look at a bias at all, okay, what will happen is you will obviously blindly trade. But if you know that the bias on the daily is bullish, the bias on the 4 hours bearish, we have a mixed bias, then you know to be extra cautious with your trades, okay? So it's more important than ever to actually look for those confluences you're supposed to have in the trade in the trade you're taking when the bias is mixed, okay? Now, that's a very basic lesson there. But what I want to show you, right? So, you know the other stuff. Like if the daily's bullish, if both are bullish, you can guess bias is bullish. If both are bearish, bias is bearish, okay? But the reason you want to look for the 4 hour, the reason you want to look on the 4 hour time frame is to give you that session bias, okay? So if you want to write this down, the daily gives you the overall bias. The 4 hour gives you the bias for the next few hours. And with this daily bias method, it can change quite quickly. It can change like multiple times throughout the day. But what this allows you to do is be able to actually trade the retracements of any trend as well as the actual trend. When we have moves like this, okay, we have a downtrend, yeah? Instead of just going, the trend is your friend, and trading like the actual bearish move and just only looking for sells, well, what you can do is you can go, well, we've just took out a low here, so we're probably going to start retracing soon. So you'd start looking for buys, catch the buy, come back to an imbalance, and you go, well, now we're in an imbalance, we're probably going to respect it and continue down. Then we come down, take out this, and then you start looking for buys again, okay? So your bias will change slightly more often, but you'll be able to catch not only the actual trend, but also the retracements inside of that trend. Because, as I said in the first lecture, the markets move by taking liquidity and offering fair value. That's universal on every time frame. So if we then apply that to daily and go, well, the dailies took a low, retracing to the imbalance, we can then have a bias that allows us to trade not only the actual trend, but also the retracements, okay? Now, we have that out the way. We know that, okay? The daily gives you the overall bias for the day. But the whole day won't be bullish. We're not just going to go up and up and up and up, or straight down, okay? We will have retracements. And that's why we look at the 4 hour, because the 4 hour gives us our session bias, okay? Oh, sorry. I put session here. My mistake there, guys. I missed that. So the daily gives you the overall bias. The 4 hour gives you the bias for the session, okay? That's why we look at those two time frames. Now we know how to look for those, okay? Let's just apply it to the charts. So let's look at this example. Let's just do this. And let's just pick a nice example. Let's pick here. Let's zoom in and see what's going on. So let's start. We're going to start over here. And I want you, this is going to be you guys telling me what the bias is, okay? So I'm going to mark a few things out, and then you guys are going to tell me the bias. So we have a swing level here, which is the swing high, because it's the end of this move, and it looks like it's the start of the downtrend. And we have the swing low all the way over here as well, okay? Which is the start of the upwards move and the end of that move. So we have the swing high. We work our way forward to the most recent price action, and we go, okay, well, we inversed this small imbalance here, took out the low, retraced, didn't have an imbalance to retrace to, formed one here. We disrespected it. Okay. Then we didn't form one here. We disrespected it, flowed around a little bit, came out, took these lows out, okay? So we've took out this low right here. Get ready to answer this in the chat. So we take out this low, and we have this imbalance right here, okay? So I want you to comment now, what do you think the bias is going to be? Do you think the bias is going to be bullish or bearish? Bullish or bearish? Comment in the chat, guys. Is this bias going to be bullish or bearish? Catching a few guys out here. A lot of people saying bearish. A lot of people are saying bearish here. Okay. So you guys think the price is just going to continue down without retracing? Okay, a few mixed answers here. Someone said bearish overall and session bullish. Jovan, you're correct. Gustavo, you're spot on there. Okay, a few mixed answers here, guys. I'm not gonna say you got that one right. Like a lot of people at the start said bearish, seeing that I was judging them, and then started saying bullish. Okay, so bullish. Okay, a lot of people saying bullish now. Okay, so bullish is the right answer. Okay, but a lot of people said bearish, which I'm confused about. Okay, I'm gonna walk you through this, and then I'm gonna show you how it played out. Okay, so we have took out this low right here, then formed an imbalance. Okay, so from the close of this candle, we would be looking for buys. If we were here, and it was this day, we would then start looking for buys. Okay, we would be instantly bullish. Why? Because price does two things. It goes from liquidity to fair value gaps. One, it seeks liquidity, which it has done. It sucked out this low over here. Excuse me. Then it creates the fair value gap. So we've got to have a bullish retracement, which we do. We create the imbalance, and now price has to come back into that imbalance and then continue the trend. Or it will come to this imbalance, inverse it, and then continue up. A lot of people said bearish, but the bias is actually bullish because we want price to come back into this fair value gap, okay? Then once we come into this imbalance, we start looking for sells, okay? The second we come into the premium zone of this imbalance, exactly how I shown you in the second lecture, or the first lecture, with premium and discount. The second we come into the premium zone of this imbalance is the second we want to start looking for sells, okay? A lot of people said bearish there. That's incorrect. The answer to this is bullish, and you'll see it play out now. So we did kind of have a bearish move down here. Then we came up, took out this, okay? Now, obviously, we did come down and take out these lows, which means that a few people probably got stopped out here. But it's not right 100% of the time. I want you to focus on that. But we do come into this premium zone, and then we start trying to find like a bit of resistance. But a lot of people said bearish, okay? I'm not too sure why, because we take out this low, and then we look for price to retrace back to the imbalance. Literally that simple, okay? So we do that. Then we clearly respect this, okay? So I'm going to ask you again, what's the bias now? Is the bias, now that this candle's closed like this, is the bias bullish or bearish? Answer in the chat, is this bias bullish or is it bearish? Is this bullish or bearish? Jeez, a lot of people, okay. Bearish. I've not seen one person say bullish. Perfect. Super duper bearish. That's right, Dan. Bearish, Elizabeth, correct. Alan, Jovan, Ghost, Little Legs, Gustavo, Chris, Harry, Junior, Metal Bat, Winfred, Arch, Dexter. Correct. Everyone is correct. I don't think I've seen one bullish. Gustavo. I'm not trying to name and shame you here, Gustavo, but it is bearish, not bullish. No one has said bullish apart from Gustavo. Sorry, Gustavo. Sorry. That's correct, Artem. Bearish, exactly. Bearish bias, guys. Bearish bias, okay? Come down and take out this low. Simple stuff, okay? Now let's do another example. So, a few people were mixed with this. They weren't too sure what was going to go on. A lot of people said bearish at the start of that, and I'm not too sure why. Because we use simple ERL and IRL, and we look to come back to this this fair value gap. We come back to it, respect it, and then push all the way down. So you would have caught this move up and then this move down, even though a lot of people would have seen this as an overall start to a downtrend due to the lower highs and lower lows, okay? So you would have caught the whole move, every move, okay? Let's continue. Let's pick out another time, okay? So let's jump out of this. Let's have another look. So let's do over here. Right. So we've had this whole move down, okay? Leon, yep. Leon, you're correct. Right, so what's the bias here, guys? Okay, we're going to work our way through this whole move. Answer in the chat what you think the bias is. This is why we use the 4 hour as well. We don't just use the daily because, for example, if we were looking for buys here, you know, we would have got caught out. That's why we use the 4 hour as well. And I know that the 4 hour was saying bullish as well here, as well as bearish here because I traded it live. But yeah, guys, what's the bias here? Here we are. We got a few answers already. Bullish, bullish, bullish. Correct. Bullish. Bullish, bullish, bullish. Everyone's got that correct. We got Harry, Jay, Abby, Azif, Alex, Chris, Gustavo, Jovan, bullish. Yes, yes, yes. Sweep, lick, end rally. Perfect. Laura, Emma, perfect. Justin, Wayne, yes. Everyone's got that correct. I don't think anyone said bear. One person said bearish. Not too sure where that came from. Bullish, bullish, bullish. Juan, Dexter, Langer, Maiden's Universe, bearish, bullish as PD rate tap into info. We are bullish. Yes, we are bullish, bullish, bullish. Okay, so why are we bullish? We use ARL and IRL. Okay. First things first. We have this right here. We got to come back to this. Okay. Now, as I said before, once we come back to the fair value gap, it's a different story. We may continue down, okay? We may respect it and continue down, whatever. Or we may inverse it, continue up to take out the highs. I don't really care at the moment. All I know is the price has got to come back to this imbalance, okay? So, we have this here, and we have this here. ERL, IRL. Price goes from ERL to IRL, and then back to ERL. Okay, let's apply that concept now. Okay, we push straight up to this imbalance, okay? Now, this is where it gets a little bit messy. Because we took out this high, okay? And we also respect this. So we look for sells. And this is where, like, this would be like the, I don't know, the 20% chance that it loses. Where you get caught out here, because you would be looking for sells due to this. Then we inverse it. Then we push straight up. So now we've inversed it, okay? Let's start again here. Getting a little bit lost. Now we've inversed it. I want you to answer 2 questions now, guys, okay? I'm going to ask you 2 questions. Now we've inversed it. What's the bias? But where's the bias going to be going to? Is the bias to this high, or is it to this fair value gap? Do we have to come to this imbalance, or do we go straight through the imbalance and come to this high over here? So comment if it's bullish, comment bullish FVG or bullish too high, or if it's bearish, comment bearish and say why. So bullish and why. Is it bullish to a fair value gap? Is it bullish to a high? Is it bearish to a fair value gap? Is it bearish to a low? What's the bias, guys? Bullish to fair value gap, or bullish to high, or whatever. Comment in the chat, okay? Bullish up to the high, okay? A few people. Bullish to the high, bullish to the fair value gap, bullish to the high. Alright, okay, okay. Okay, most people got that right. It is bullish to the fair value gap, yep. I'll give a few more seconds for people to comment their answers. Ghost of Uchiha. Terrence Lennon. First, Black Drift King, bullish to high ERL. Not necessarily. Bullish to the moon. Jovan, correct. Vicky. Wayne. Justin. Perfect. Bullish to this fair value gap, guys, okay? That is the answer. We are bullish towards this fair value gap. It's the same routine again. We will either come to this fair value gap, respect it and continue down, or inverse it and come up and take out the high, okay? Let's see how this would have played out. The answer is bullish to the fair value gap for now. We're not going to go up and target these highs. We're going to look at and see how price reacts to this fair value gap, okay? So let's see how that would have played out. Okay. So, we would have caught this, maybe got stopped out here, but would have caught this and this. Okay, as I said, the bias, no strategy works 100% of the time, so there are going to be outliers, like this candle right here. But all you need to understand is that like 80 to 90% of the time, the bias is correct using this concept. Now, we've come into this fair value gap here, okay? Now, it's too soon to say anything, okay? But if we use, let's just draw that middle line. If we use the premium and discount zone, and you remember what I said from before, and we go, well, now price is in the premium zone. As you can see, we closed, kind of respecting the fair value gap. Is the bias here bullish or bearish, okay? Is the bias here bullish or bearish? Answer in the chat. You don't need to really say why, just is it bullish or is it bearish?
Playing from Josh's iPhone 3.
Excuse me, guys. I was on my phone there. That was my Alexa. Emma said neither, really. Abby, Wayne, Gustavo, Dalen. Jovan said bullish. Adil, bearish. Azif, Big Deeds, Terrence, Jonathan, Alexander, Ezra, Chris. Ezra said bullish as well. Okay. Dexter, bearish. Juan said bearish to look for liquidity. Okay. Okay. So, this is where it's going to catch a few people out, okay? A few people have said bearish, a few people have said bullish. Let me show you the answer, okay? So, we have the premium zone. We know price. That's where price is going to reverse. The best place to look for sales is the premium zone. PDRAs, all that stuff, yeah? Now let's zoom into this and go, well, we've just took out a high here, yeah? Okay? And we've come into the premium zone. Let's see how the next candle plays out. Okay. So bearish is correct, by the way, because of that. We also have this imbalance right here, okay? So let's just delete this fair value gap for a second, okay? Completely forget about that one to the left-hand side for now. Focus on this. Price has just took out a high, formed an imbalance, and now we've got to come back to that imbalance before we decide what we're going to do, okay? Okay, well, we come back into that. Now we start looking for buys. There we go, okay? Does that make sense, guys? Now we draw this back in and we go, well, we've inversed this, so we target the highs. Now, unfortunately, in this example, we did actually just push straight up, take out the highs as well as invert this. But I want you to follow the process of how we found this bias, okay? So it's bearish for 2 candles and then bullish literally straight after. And this is a perfect example of this like bias method playing out to a T, okay? Let's play that out again, okay? So, the bias is now bearish for 2 reasons. We took out the premium zone of this fair value gap. That's the best place to look for sales, the most expensive price. And now we have this liquidity right here, okay? So we took out a high and also respected a bearish fair value gap, okay? So we look for sells, catch a nice dub. Not only do we have equal highs here, but also we have this imbalance that's formed right here, which I'm going to zoom in for people so they can see that. We have an imbalance right here. Now let's delete this big fair value gap and we go, well, ARL to IRL says we're due a bearish retracement because we take out the ARL, which is the high, and we retrace back to IRL, which is the fair value gap, okay? So we come back to that fair value gap. Now we start looking for buys, okay? And then we draw this in again. So now we start looking for buys. Coming up, it's back to ARL to take out this high, okay? Boom. Now, once we close above this fair value gap, that counts as what? An IFVG, which means the price is then going to go to the other side of ARL. So we take out this IFVG, or sorry, we take out the fair value gap, form the IFVG. Therefore, we then want to target the highs. Now, unfortunately, in this example, we did end up taking out the highs, okay? We may continue up, though. But as you can see, we do end up pushing straight down after taking those highs. We then retrace. And you can see how it plays out. So here we have the fair value gap. We form on the way to take out these lows. We inverse that fair value gap, take out these highs, then reverse back down. Come down, take out these lows and these lows. So now we would start looking for buys back up to this imbalance over here. I think this is the end of the back testing now. We'll see how it opens on Monday. But that means for Monday, really, we would want to look for buys back up to this imbalance over here. Maybe even this one. But for now, we just want to target this one. Okay? The exact same way we just did with that bullish move up. But yeah, that's how you want to find your bias, guys. It's literally very, very simple. Okay? Now, the notes for the bias. 1. Or how to find a bias. So, new subheading, guys. How to find your bias. Step 1. Go to the daily time frame, obviously. Then go back to the most recent swing level. Go back to the most recent swing level. And you know what those are as we discussed them. Okay? Start identifying ERL, IRL from the most recent swing level. Once you've got the daily, so once you have the daily, go to the 4 hour. And do the same thing. Okay? Now there's 3 possible outcomes for this bias, obviously. So first of all, there is a mixed bias, okay? Mixed bias. And this is when you want to rely really on oh, nice to see you here, Ryan. Nice to see you here, Ryan. How you doing? So if there's a mixed bias, what you want to do, really, is that's when you want to rely on the middle time frame structure. So as we spoke about in the first lecture, middle time frame structure is like the 1 hour. So rely on MTF. And that's because the bias is slightly mixed. So we don't know if it's going to be bullish or bearish. But what we really want to find out is if the next few hours of when we're looking for a trade, whether or not that's going to be bullish or bearish. So but rely on the middle time frame, okay? In brackets, that's like the 1 hour time frame. Maybe the 2 hour. I don't really use the 2 hour though, but rely on the middle time frame, which is the 1 hour, the 2 hour, okay? And trade with that. Then there's obviously bullish, bearish. You know, we don't really need to go too in depth in that. Pretty self-explanatory. But how to find the bias? This is what you do. These are the outcomes. If there's a mixed bias, you want to rely on the 1 hour or the 2 hour time frame and trade with that. Basically, just do the same thing on there, and then we'll see if we're bullish, bearish. You know what to do with that. Thanks, Ryan. Appreciate it. Yeah, like up the stream, as Big Deeds saying. You know, Big Deeds, like up the stream. So that's what you need to do, guys. Okay, to find your bias. Now, as I said before, I started to show you the bias. There are a few areas where ERL and IRL might be a little bit blurred. Okay, so this is where we need to look at consolidations, and I think we might have touched on this in the last lecture. I'm honestly not 100% sure, but very, very simply put, after a big move, okay, we will consolidate, okay, after a consolidation, we will have a big move. That's what you want to write down. Okay, so the reason that is you know, it's like take profits, cooling off, plus also then you look at the volume and you go, well, in Asian session we don't really have a move as often as we do in New York or London, simply just because of the volume. But I'm going to show you exactly what I mean on the charts. After a big move we will consolidate, and after a consolidation we will have a big move. Okay, that's what I want you to understand, and I'm going to show you exactly what that looks like on the charts, and then I'm going to show you exactly how to deal with a consolidation with your bias, okay? Or for your bias. Okay, so let's have a look. So, to understand this, first we need to go AMD. Okay? What a distribution is a big move. Okay, what happens after distribution? We typically go back to an accumulation. Then what happens after an accumulation? We manipulate and then we distribute, okay? Sometimes we will have AMDX. I know, I've even shown you this in the last lecture. We discussed AMDX, and that's where we go from a distribution to an expansion. But what happens more often than not is AMD rather than AMDX, which means, okay, oh, excuse me, which means, okay, Write this down. It is easier to catch a big move after a consolidation, hence why I trade AMD, rather than catching a big move after a big move, okay? In brackets, continuation, okay? It's a lot harder to catch a big move after a big move because of this simple reason. AMD occurs more often than AMDX, and if it was the other way around, and if AMDX occurred more than AMD, I would not be teaching you AMD as a basic starter point. I would be showing you AMDX, okay? So AMDX can happen sometimes, and that is the outlier. As I said, nothing works 100% of the time. The bias I use never works 100% of the time. AMD never plays out 100% of the time. It's never just 100% of the time AMD. Sometimes we will have AMDX, sometimes we will have AD, as I shown you in the last lecture. But what you need to understand is probability. That's the whole reason we trade. That's the whole ideology of trading, is that it's all in probabilities, okay? The probability is that AMD will happen more often than AMDX. Therefore, it is easier to catch a big move after a consolidation than catching a big move after a big move, okay? I don't know if that's shrugged shoulders there. But let me show you what I mean, okay? So, let's look at just this entire chart, okay? We can look anywhere we want and you will see it everywhere, okay? So, we have a massive move down, yeah? Then we retrace and consolidate, okay? Then we consolidate, push down, then we push back up, which would technically be the X phase. Then we have the consolidation. Then we push up, then we consolidate, then we push down, then we push up, and it looks like we're starting to consolidate with this bullish bias that we're due in a few days. That's just one example of the most recent price action. Here it is again. Move up, consolidation, move up. Then we have the X phase, as I said, which is the outlier. Then we have all this here, so we push up, consolidate. Okay, push up, consolidate, push up, and then kind of mess around here, but then consolidate. Okay, here we consolidate, then we push up, then consolidate, then push down, then consolidate. Okay, we consolidated here after pushing up. We consolidated here after pushing up. Okay, like we can go on all day. Okay, we push down, consolidate. We push up, have a small consolidation, push up again, have a small consolidation, push up, consolidate. Like, push up, consolidate. You know, we have a massive consolidation range here. But here's an example of AMD on the daily time frame, right there, with an FVG entry. Here we push down after a consolidation, push back up, then consolidate. Okay, then push down, push up all the way, slightly retrace, but then consolidate. Okay, then we push up again. Have a like, I can go on all day, but I'm pretty sure you understand the point. Like, just look at this. Okay, that's just on GJ. Okay, so if you didn't believe it already, after a big move, we're more likely to consolidate than reverse, than continue / reverse. Okay, now sometimes we will reverse. As I said, not every single time we will just continue. Not every single time we will just start accumulating again, but typically we will consolidate after it. Hence why we trade AMD, hence why we trade power of 3, hence why we look for times of volume, and all those other little bits. Sometimes we will have a move like this where we push up and then push down, but then we will always just consolidate. Okay, so realistically, the best place for you to look for reversals is consolidations, because if you go, well, actually, I'm going to look for a continuation every single time, and then you go, well, here you can see, let's look for a continuation over here. Okay, after pushing down, it's not really going to work. Now you can catch the retracements, okay, and we would have caught the retracement, especially on the daily time frame. But you do the same thing here. We go, okay, well, let's catch a continuation or a reversal. Okay, then we consolidate, then we push down, reverse, consolidate again. So all you need to really do, And the way it's going to be the simplest and the easiest way for you to trade is simply just wait for a consolidation. Like, that should be pretty well understood by now. That's why we trade AMD. But what I want you to understand is that, like, that's that concept out the way. But when we are consolidating, okay, I want you to write this down too. So when we're consolidating, ERL, IRL may play out a little bit differently, and it won't be that the principles are different. We will still go from lows to fair value gaps and then to highs, vice versa. It's more that it will get harder to identify. It will get harder to identify. And sometimes what you'll notice is, sometimes we may not even have a fair value gap. Okay? Like if we go back to this, where is a good example? Here, over here. Like, look at this consolidation, okay? Right here. We don't really have any fair value gaps to use. You see? Like, there's one here. We inverse, then take out the low. But then we don't really have any more. Okay? So what do you do? And I was explaining this to someone today. So when you see a consolidation, when you're looking for your bias, okay, write this down too. When you're looking for your bias and you see a consolidation, specifically one with no fair value gaps inside of it, specifically with no fair value gaps, you want to move time, change time frames. You want to go up a time frame, okay? So what will happen is, for example, right, if we're using the daily, if we use the daily time frame for our bias and the 4 hour, and we're consolidating on the daily, you want to use the weekly, okay? And when we do this, using the middle time frames becomes extremely, extremely important. Okay, write all this down. So if we use the daily and the 4 hour, and we're consolidating on the daily, then use the weekly, okay? Use the weekly, excuse me, and the 4 hour. Okay. Then when you do stuff like this, it becomes extremely important to use the middle time frames. And this can work all different types of ways. The 4 hour might be mixed, so you go up to the daily and the weekly. The daily might be mixed, so you use the 4 hour and the weekly. But whenever you use this, you want to make sure you're using the middle time frames. Why the middle time frames? Because the middle time frames, they show you exactly what's going on for those next few hours, okay? Okay, so it's very, very important to use the middle time frame when that happens, okay? So if we go back to this example, this is when you'd want to use the middle time frame. We go, the daily's consolidating. What does the weekly look like? Well, okay, I think this is glitched, but this is the same idea, okay? I don't know why it's done that. What I was trying to show you was that the weekly needs to come up and take the high after respecting the fair value gap here. Okay. And that wasn't even cherry picked, like, you just know how it's going to look. We were supposed to do that. I don't know why it's closed up that, because if we go back to the daily, you can see we're clearly not at a new high. But as you can see, we respected this, so we'd look to come up and take out this high over here. Okay. So then you use the weekly, but then for your actual entry and etc., that's when you'd want to use the 4 hour, okay? That kind of ruined the example because it just jumped to the end of the week. I'm not too sure why. But yeah, you can see basically on the daily, it's kind of consolidating. But after this point in time, you would be bullish because you would be coming up to try and target these highs over here, okay? Then we take those highs out and then we get out of that consolidation range, and then that's when you'd want to look for the retracement, and then a continuation. Okay, so that's how you find your bias. I hope that's understood. The way you want to find your bias is going on the daily, going on the 4 hour, looking for your ERL and IRL. If the daily or 4 hour, or let's start again. You go to the daily and the 4 hour, okay, and look for the ERL and IRL. If one of those timeframes is consolidating, move up a time frame, and that's when middle time frame structure becomes even more important. If it wasn't important already, which it should be, then now more than ever is the time to actually rely on the middle time frame structure, okay? So you want to use the daily, the 4 hour. If one of them's consolidating, move time frames and get out of that consolidation, because then you will see a bigger picture and you'll see what's likely to happen in slightly longer term, but it will give you a bias, and then you use the middle time frame for that shorter term bias as well, and align those two things together. And yeah, the second point that I made there with the consolidation and using the higher time frame and then relying on the middle time frame, that might be a bit confusing, so it's very important you write that down. But also, I've shown you it, and now all you really need to do is backtest that and trade that, and the more you apply it, the deeper you'll understand. On a deeper level, you'll understand it, okay? Or you'll understand on a deeper level, okay? I do not use order blocks. You do not need them. Or breaker blocks. Right, so that's how you find your daily bias, okay? I hope everyone understands how to find the daily bias. Now we need to just basically look at psychology. So precision trading framework. This is the framework that you should be following when you're taking a trade, okay? You identify the liquidity zones, look for an AMD manipulation phase, then confirm direction with that time frame, IFVG entry model, all that stuff that I've shown you from the past couple lectures, and align it with the daily bias for that precision setup, for the precise setup, okay? That's it. Like that should be your strategy at the moment. And before we move on, the giveaway, we have hit the goal, obviously quite early on in the stream. That's going to be at the end of this. All we need to cover now is psychology. Once we cover that, we're looking at one example on the charts, and then we're going to do the giveaway, okay? So, precision trading framework, this should be the framework you use. But now we need to look at psychology, okay? Excuse me. So, why does psychology matter in trading, okay? 90% of trading success is mental. I can give you all of the source. I can give you all of the tools to use, all right? But unless you can actually use them properly with the right psychology, you're not going to get anywhere, okay? You can have... I could give you the best strategy in the world, $1 million in funding, and I can literally sit next to you whilst you take your trades. But if you don't have a good psychology in your trading, you're not gonna be able to succeed. Okay, not only do you need a good strategy, but you need a good psychology as well. Now, psychology can be quite boring. I know a lot of people find it quite boring. And I know from my perspective, it is quite boring because when I make videos about it, they get less views than other videos, which means most people don't watch it. But it's very, very important. You can have the right strategy, but without the right psychology, none of this matters. And I'm not just going to be showing you the baby stuff here. I'm not going to show you FOMO, greed, all the basic things that you've definitely heard of before. I'm going to show you a little bit more advanced stuff and how to deal with those things. Okay, so 90% of trading is emotional. It's all mental. Sorry, is mental. 90% of trading is mental. There we go. Your emotions and habits shape your decisions. Okay, in and outside of trading, and that's why discipline comes into it quite strongly. And in the course as well. If you've watched my actual course, you'll know that I talk about discipline quite a lot, because discipline outside of trading translates to discipline inside of trading, and not inside of trading. And it's very important to have good discipline outside of it, because trading reveals literally everything about you, especially when you're using live real money, funded accounts, funded challenges. If you're someone who, if you lie to yourself, if you cope all the time, you will cope and lie to yourself in trading. It's very, very raw in terms of that aspect. But There is a lot of fear as well in trading, and there's a lot of lack of confidence. We're going to be covering that as well. But mastering your psychology creates consistency and confidence, okay? Now, you don't have to answer this question in the chat, but just think to yourself, how often do your emotions influence your trades? How many times have you got into a great setup that you think is perfect? You don't have to answer this question in the chat, but how many times have you exited a trade for the wrong reasons due to emotional influence, okay? Due to your emotions. How many times has your emotions influenced the trades? How many times have your emotions influenced the decisions you make inside a trade, okay? You just have to think about that. Like, I'm sure most people here can agree that a lot of the time the trade you take are impacted by the emotional decisions you're making based on the trade you're in, okay? You'll take a trade for no reason. You can close a trade too early for no reason, just because your emotions. You can get in for FOMO. You can get out because of FOMO. You can lack confidence and close it early due to a lack of confidence. You can see prices reversing away from your take profit. Get FOMO, think you're going to lose the trade. Also have a lack of confidence and close the trade early. There's a lot of reasons, okay? There's a lot of people will suffer from this, and that's why it's the biggest part, because it's not about the strategy. You can have the right strategy, but if you don't have good psychology, none of it matters, okay? I really want you to understand that. So the 3 things that I'm going to teach you today is adaptability, okay? And that is to the markets, also to the an issue with the psychology. So the problem is that markets change. What worked yesterday might not work today. Now, that's very simply put, but what I mean by that is the markets are changing, the world's changing, the economy is changing, the world is changing, okay? And the strategies that people used 50 years ago when they were trading Forex, believe it or not, it actually used to be a thing where in China or Japan, I think it was, all the housewives in Japan would trade Forex and make more money than their husbands. That's actually how really it kind of started off. Yeah, believe it or not, it was Japanese women, I think, Japanese housewives, and they were making more than their husbands. But the market's always changing, okay? What those Japanese housewives used to trade will not work today, and vice versa. Why does it happen? Well, there's institutional manipulation. Then there's also the institutional's point of view on the world. And then there's also volatility, okay? So markets change. Tools that you use change. Indicators stop working. Indicators start working. Strategies change. Strategies can not stop working. Strategies can start working. Strategies can get better. Strategies can get worse, okay? So you have to adapt to changing markets. And the way you do that is by consistently backtesting. Like, I'm profitable. I'm making money from trading, and I preach that people need to backtest in order to get to this level. And that's right. But also, if you're going to continue and maintain this level, you need to also backtest different market conditions, okay? Like backtest the last time Trump was in charge, backtest the last election, backtest elections, backtest COVID, backtest the 2008 crash, backtest the 2000s, backtest 9/11. All these different things that change the markets and kind of just put a spin on things. Backtest them, and you'll pick things up, and you'll go, well, when there's a presidential election, most of the time price goes more bullish and stuff like that, and there's more volume, which leads to more fair value gaps being disrespected, because the lower the volume in a market, the more that these support and resistance zones will be respected. That's a rule of thumb. So when there's more volume in the markets, and that can typically happen closer to elections as well, then fair value gaps are more likely to be disrespected. Okay, when COVID was going on, there was a lot more volume in the markets because a lot more people were trading, especially in crypto. A lot more people were finding out what crypto was. A lot of people were trading for the first time during COVID. I was one of those people. And that can influence how fair value gaps are respected. Believe it or not, it can influence how quickly liquidity is swept, how quickly we reverse after taking liquidity. There's a lot of different things that you need to pick up on. And what it will do is, it's not necessarily about writing it down and then spotting the outliers or the consistent failures. It's more about building that intuition. of knowing these types of things, okay? And you will know them as you backtest markets at certain markets, okay? And when conditions don't match your strategy, it's very important to step back and backtest, refine setups for the current environment, okay? No strategy, like the strategy I used last year is not the same as the strategy I'm using this year. It's similar tools, and that I mean literally like a year ago, not 2024 to 2025. I mean literally as the strategy I was using a year ago today is slightly different to the one I'm using today because it's been refined, okay? And that's always going to be happening. Anyone you learn from, anyone you see anywhere will always be refining their strategy, especially the actual consistently profitable ones will always be backtesting, always be refining their strategy for different market environments. That's what you need to do. But this is why it ties into psychology, okay? Because a lot of people will journal their trades and see that this specific thing loses. You know, they'll spot these outliers, they'll spot these consistent issues within their strategy, and they'll think it's consistent, but it might only be over the course of like 10, 20, maybe 30 trades, and you'll have like a few consistent issues, okay? And the issue with that is that the reason that's psychology is because you're adapting too quickly. You're trying to beat the curve, you're trying to adapt, but you're doing it the wrong way. And the way I'd recommend doing this is every 100 trades, that's when you want to review your strategy. That's when you want to review your journal. That's when you want to maybe adapt something, okay? So I'm just going to go back to this so you can write it down, okay? When backtesting, when adapting to the markets, okay? You want to review your journal / adapt every 100 trades at least, okay? Like, think of it like this, okay? The better you are at trading, the more confluence you need to change the strategy, okay? What I mean by that is, picture it like this, okay? It's like a boat, all right? So when you're a beginner trader, you're in a boat, you're in like let's say you're in a speedboat, okay? You're a beginner trader and you're in a speedboat, and you can go off course, you can change direction very, very quickly. You can go, actually, because I'm a beginner, I'm going to stop using SMC and use ICT. Actually, I'm going to stop following that guy. I'm going to follow this guy because I'm a beginner. You know, I haven't really got a consistent strategy that I'm using. I haven't really learned anything yet. So I can pick and choose. I can change direction. I can go wherever I want to go at the moment. But then as you get bigger in trading, as you're, you know, making consistent income, as you quit your job, as you start, you know, you like paying rent for a place to live based on your income from trading and all those different things, the decisions you make around your strategy have to become slower, okay? Then you start going from a speedboat to like, I don't know, like a fishing boat, and then you might go to like a full-on cruise ship, where if you're going to change direction, it requires a lot of effort and a lot of time, okay? Think of it like that. As a beginner trader, you're in a speedboat, you're just going dead fast, you know, you can change direction whenever you want. The better you get at trading, the more you rely on trading for your lifestyle, the more time and effort it takes in order to pivot to a different strategy, in order to change, adapt to the markets, okay? So what you want to do, stick to a rule of thumb of every 100 trades at least. That's when you want to review. And when you are adapting and changing your strategy, okay, changing a tool, you know, you can change, you can remove them, you can add ones, you can change how you use them, whatever it is. When you're adapting, when you're changing, make sure, this is very, very important, to only really change one thing at a time. Okay, and the reason for that is because you could change 4 or 5 different things at once. Then your win rate decreases, and then what tool was it that caused that win rate to decrease, okay? You can change 5 different tools all at the same time, then backtest again for another 100 trades, find out that your win rate decreased, you know, your profitability factor dropped, and then you go, okay, let's reverse that step. You have to literally remove all 5 tools at once, and then you start again, and you have to do each one individually to find out which one didn't work and which ones do work, okay? That's very important. So it kind of ties into psychology because a lot of people will do this too quickly. Can I draw? I think I can, can't I? Let's see. Yes, I can. Okay, great. So a lot of people will try and adapt to changing markets too quickly, and then that causes them to actually decrease in profitability, okay? Their win rate decreases. They change too many things at once, they change too quickly, and they have to then reverse it, and it just wastes time. Then you have to reverse it, then try each tool step by step for 100 trades, add it, remove it, change it, whatever. And that applies to especially more when you're relying on trading for your income. But that's part number 1 about psychology, okay? Step number 2 is simply too many decisions equals more mistakes, and this is called decision fatigue, okay? You may have heard me talking about this in my early days of doing YouTube and Instagram, etc. But what this means is basically the more decisions that you make, the more the quality of each decision you're making begins to deteriorate, okay? Like, obviously, once you're awake, the first decision you make, once you're awake, not the first decision you make straight from getting up, once you're awake, the first decision you make will be a lot better than the decision you make towards the end of the day. 1, because you'll be out of patience, but 2, because you won't be suffering, but you will be you will be decision fatigued. You'll have decision fatigue, okay? It's mental exhaustion from making too many choices, okay? You kind of get burnt out. You don't really know how to think. There's burnout, but then there's also decision fatigue. Like, burning out is when you just don't make any decisions and you just kind of, your head hurts. And decision fatigue is when you can't think properly, even if you wanted to. And when you do think, it leads to impulsive or poorly thought out trades. And outside of trading, it would lead to impulsive or poorly thought out decisions, okay? So decision fatigue is mental exhaustion from making too many choices, and it leads to impulsive or poorly thought out trades, okay? Beware of that. Now, how do you deal with it? You limit your trading hours already, so that's why you should be trading only London or only New York, okay? And that's why also you should only really be focusing on 1 to 2 setups per day, okay? Because you will have more clarity. And now another thing, and this kind of depends on your life as well. Like, think about it, just think about it logically, okay? There's one guy, and he's jobless, may not be making any money, but he's jobless, and he's, like, let's say, 18-year-old jobless, okay? Then there's a 34-year-old man who has a job, 5 kids, and a wife, and a house, and a mortgage, okay? He owns a business as well, let's say. So there's a 34-year-old man who owns a business and has a family, and then there's an 18-year-old boy with no family, no money, no overheads, no job, okay? Who do you think is going to get profitable quicker? Well, obviously it's going to be the 18-year-old. Not because of his age, realistically, but because of the amount of free time that he has. And it's not because of the amount of free time he has to dedicate towards trading, but it's more about the decision fatigue, because he's going to be making less decisions per day. Because as a married man, the 34-year-old guy will make decisions in his business, in his job. Then he'll talk to his wife. Then he'll talk to his kids, look after his kids, raise his kids, discipline his kids, discipline his employees if he's got any. There's all these different decisions that he's got to make. And then he comes home and then he's trying to trade. He's already going to be mentally exhausted. But then also you add all these bad habits on top of it, like trading all hours of the day and trading every single setup you see. It's just going to lead to mental exhaustion from making too many choices, leading to impulsive or poorly thought out trades, okay? So not only does it depend on your lifestyle and how much time you can actually dedicate to trading, but it also depends on these two things as well. So if you're someone who has a 9 to 5 and has kids, has a wife, whatever it is, if you have a family, if you're a grown person with a family, etc., you want to make sure these two things are perfect, okay? It's more important than ever that you focus on these two things, because you can't necessarily change your family. You can't not have kids anymore and not have a wife. Well, I suppose you get divorced, but you can't not have kids anymore, not have a business anymore, not have a job anymore, hopefully. So you want to focus on limiting your trading hours and focusing on 1 to 2 setups per day more than ever. But then again, if you're someone who was like me when they first started, who I had a job, but I didn't have many overheads, I didn't have a wife and kids, I didn't own a business, so I could dedicate more time to trading, but also I wouldn't be mentally exhausted every single day, then it's not too important to focus on these, okay? So it kind of depends on how much free time you have and how many decisions you're making, okay? Try and make your life as easy as possible, even if that means making hard decisions, okay? Because don't focus on how hard the decision is, focus on the amount of decisions you have to make. You want to make as little as as little decisions as possible every single day. And that will allow you to actually do better in trading, because you won't have mental exhaustion. You'll have better clarity, okay? Because too many decisions equals more mistakes, mental exhaustion, poorly thought out trades, okay? One trade a day will keep the 9 to 5 away. Exactly, Wayne. So you want to focus on this, guys, okay? I know it might sound boring, it might sound stupid, you might not agree, whatever, but trust me, okay? You have to trust me there. Too many decisions equals more mistakes, and you need to focus on this more if you're in a 9 to 5, etc., okay? Nice to see you, Gustavo. But yeah, so that's decision fatigue, okay? Now we want to look at metacognition, okay? You may not have heard of this term before. You may have heard of this term before. But think about how you think, okay? That's what I want you to do. Metacognition is awareness of your thoughts and decision-making process. So it's kind of like having a conscience. Like, we all have conscience, obviously. You know, we have free will, etc. But metacognition, okay, is being aware of your thoughts. It's being like present in the moment, aware of your decision-making process, okay? Think about how you think. Why does it matter? Because it helps identify emotional triggers and biases, and it improves your self-discipline, okay? Like, it's going to be very hard to master this. Like, it's not just like with the daily bias strategy, with the AMD, with the liquidity strategy, I can just go use this, and there you go, okay? But with psychology and this specific issue, it kind of takes a little bit more than just me going do this. You have to kind of do it, and then and it's like a muscle, okay? The more you do it, the stronger that muscle will get. So the more you're aware of your thoughts, the more aware of your thoughts you will be. And that sounds completely stupid, but it's about how easy it is, okay? So if you're trying to be aware of your thoughts all the time, it will be a lot easier for you to be aware of your thoughts, okay? And that sounds very, very, very stupid, I think. Like, very easy to understand. I think anyone can assume that the more you think of your thoughts, the more you'll think of your thoughts. But think about the muscle side of it, okay? So the more you do it, the easier it will be to do so, and it will be easier to stay in that habit, okay? So be aware of how you're thinking, okay? It's like a muscle, and it's the same with discipline. Discipline's like a muscle as well. If you're not disciplined in when you're sleeping, when you're eating, like, it can go very, very autistic. You can be disciplined in what you're eating, when you're eating, when you're going to the gym, what you do in the gym, what time you sleep, what time you wake, what you do before bed, what you do when you wake up, what you wear. If you're disciplined in every single thing you can think of, and then you start trading, think about how easy it will be to then become disciplined in trading. Like, it's going to be very, very easy. But if you're someone who lazes around all day, you know, addicted to all these different things, food, porn, games, weed, drugs, I used to be in that place. But if you're someone like that, it's going to be very, very easy for you to lack discipline when you go to trading. If you're undisciplined, if you don't have discipline in anything that you do you really think you're going to have discipline in trading, okay? Now, it goes the other way around. If you're disciplined in everything that you do, it's going to be a lot easier to have discipline in trading, isn't it? That's why it's like a muscle. But metacognition specifically helps identify emotional triggers and biases, because you can go, I'm thinking emotionally now. I'm feeling angry. I'm going to step away from the charts. I feel like I'm going through a revenge trade. I'm going to step away from the charts. I feel greedy. I feel like I want to make money today, so I'm going to step away from the charts. And there's a difference between wanting to make money and then needing to make money. Like, you can wake up and then go on the charts and try and force a trade because you want to make money, or you can wake up, follow your plan, etc., because you want to make money. So that's a little bit of a different thing, but it helps you. Metacognition, on being aware of your thoughts, allows you to identify emotional triggers and biases, And that's why I say, especially with the bias, is to look at the fundamentals first. Now, I think I might have shown you, I'm not too sure if I've shown you what the fundamentals are. There's a video on my YouTube channel if you want to check it out, but it basically shows you how to look at the fundamentals, okay? Now, I want you to look at the fundamentals first, and it's very important that you do it first, because if you load up the charts and you go, oh, here's a perfect setup, but we've got CPI in 10 minutes, you're probably going to have a bias there, and you're probably just going to ignore that, especially if you're undisciplined in everything else you do. And then you'll just end up taking a trade, losing the trade because of news. But if you looked at the fundamentals first and go, there's CPI in 10 minutes, so I'm going to give it 20 minutes, and then I'm going to analyze the charts. One, you've got discipline there, but also you're avoiding that bias and emotional trigger. So metacognition is being aware of your thoughts and decision-making process. It allows you to identify emotional triggers and biases, and it improves your self-discipline, okay? So what I want you to do, the kind of like the actionable step from this subject, is basically just after each trade, and it realistically, this is going to be useless. Like, you're not going to actually think about this much, but it allows you to then, as I said, like, build that muscle. So when you're thinking about your thoughts, it's going to be a lot easier to be aware of your thoughts in the moment. So if you're going, why did I take this trade after the trade, and what was my thought process after the trade? When you're in a trade next time, or about to take a trade next time, it's going to be a lot easier to just take that step away, identify the emotional triggers, and improve your self-discipline, okay? I told you this isn't going to be about like FOMO and greed, basic stuff. We're looking at metacognition today, and that's basically being aware of your thoughts. You can call it self-awareness. I call it metacognition. Like up the stream, guys, by the way. Really helps me out. If you've learned something new so far, like up the stream. Now, I've got a nice paragraph here, okay? Now, what I'm going to do is I'm just going to very quickly move the chat box so it's out the way. Screenshot this. Okay, screenshot it. And even pause it. Pause the stream if you want. Read this, okay? I'm going to read it out now for you. But make sure you got your screenshot. I'm going to give you a couple seconds to take that screenshot, okay? Okay. So, this is very important, okay? Psychology in trading can never be fully conquered because it's not just about strategies and setups. Excuse me. It's about mastering yourself in an environment designed to exploit your human emotion, okay? That's what trading is. And not only do you have the actual markets and the charts designed to exploit human emotion, but you also have the prop firms, which make it even harder to do. Okay? The market thrives on fear and greed, two of the most powerful drivers of decision making. And no matter how experienced you are, these emotions will always find a way to creep in. Okay? So think about it, right? Even after years of trading, the temptation to chase a setup, the frustration of a losing streak, or the overconfidence after a big win doesn't magically disappear. I can tell you that from experience, and so can other people. The market evolves, as we discussed, and so do the ways it challenges your mindset. What sets successful traders apart isn't that they've beaten psychology, because that is literally impossible. You cannot beat psychology, okay? But what sets us apart isn't that we've beaten psychology, but that we've learned to recognize and adapt to it. We know when our emotions are clouding our judgment because of metacognition, and have systems to stay disciplined. Plus, you also have the muscle of discipline. Okay? Trading is a mirror. It reflects your patience, your ability to handle pressure, and your willingness to stick to your rules. As I said, it literally is, it shows you everything about yourself. Every trade becomes a test of your emotional control, and while perfection is impossible, progress is everything. You don't beat psychology, you learn to work with it, adapt, and grow as a trader and as a person. That's the real challenge and the beauty of this journey, okay? Make sure you read that. Make sure you write that down. I want you to understand that. Psychology is not a thing that you learn and then that's it. It's a process you always have to be working on. I have to be working on it still. I can get greedy. I can get fearful. Everyone, so it's a human emotion. It's not just something you deal with and it goes away, okay? Beautiful. yeah, so make sure you save that down, guys. Appreciate it, big deeds. So, applying everything live, okay? Now, I would be showing you a perfect setup on a Monday, you know, and then we take a trade. Now, if you want to watch me take a trade live, all you have to do is watch my next stream, which is in like 9 days, okay? We're moving to the giveaway, by the way, now, guys. The giveaway is almost here, but as I said, I'm live every single day, usually, from the 21st onwards, okay? And that's where you can watch my past ones as well. That's where I apply all this live. But, yeah, so what we're going to do is we're going to just bring it all together here. So, the bias here, okay? We're going to be doing a, excuse me, trade now, okay. So, I think I wrote this twice. Bringing it together, okay. So now we're going to be working on the bias. Okay. Okay, so this isn't just the bias. We're going to be looking at the actual trade. So, bringing it all together, okay? So the bias here on the daily time frame is looking slightly bullish, okay? Because we've got to come back. This is the exact example we looked at the start. We've got to come back into this imbalance over here, okay? Now we go to the 4-hour time frame and we go, let's look at the 4-hour. So what's the 4-hour done? The 4-hour has swept this liquidity here, left behind an imbalance, and so far it has seemingly respected this imbalance. So what might happen is we might come down, take out this low over here before eventually actually coming over here, okay? So the daily's saying bullish, the 4-hour is saying bearish, which means we're slightly mixed, which means we can trade in either direction, okay? So the daily, bullish, 4-hour, looking bearish, and what might happen is we might come all the way down here and then come back up and come back to that imbalance and then do what we need to do past that point. So for the next few sessions, we're looking slightly bearish, okay? And for the daily, we're looking bullish back up to this imbalance, okay? So we use that bias. We go, well, we're slightly mixed, but more recently, we're looking bearish. We then go to the 1-hour time frame, see what's going on there, and we see we've just took out a 1-hour high over here, which aligns with that bearish bias. Plus, we have a nice AMD cycle playing out right here. So it looks like we might be able to target this low. Now we go to the 5-minute, which is my entry time frame, okay? And we go, well, we missed an entry. There's one right here. But I think we'd want to take this one. So we go, well, we just took out this high right here. We could have entered here. Like right here. But if you remember something from the first and second lecture, you want to focus on unmitigated fair value gaps. If there's an unmitigated imbalance before our entry or near our entry, you don't necessarily want to take that, okay? So we get in here, okay? We put our stops a little bit above this imbalance right here, okay? Because we got it above this liquidity and above this liquidity right here. Now we can target this low all the way down here. We've had nice price action leading up to this. Then we push right up, and it looks like we're going to push down now, okay? We could even try and target this low all the way over here if we really wanted to. But we want to focus on the swing level of this 5-minute time frame, okay? So we just followed it step by step. And there we go, okay? We had the right time to trade, which was 1:30, okay? 1:30. We had the mixed bias, which was looking slightly bearish for the next few hours. We then had the 1-hour, which aligned with the structure, or with the 4-hour. Then we had the 5-minute, perfect price action, perfect FVG setup. You take it, and then it pushes all the way down. Now, if you want to see me applying this on the charts live, I am live, back live again on Tuesday next week, which is the 21st of January. But now it's time to talk about the key takeaways, and then we're moving on to the giveaway, okay, guys? So that was very quickly just that in action, okay? I just don't want to move. I don't want to move too quickly here. That was that in action, okay? The plan you should have written down right now, that is that in action, okay? So, the key takeaways from all of this is that liquidity drives market movement. AMD reveals institutional manipulation. Daily bias ties everything together for precision. And psychology is the foundation of your consistency, okay? So, now we're doing the giveaway. Okay, guys. It's giveaway time now, okay? Right, let's see how many likes are on this stream, okay?
Playing from Josh's iPhone 3.
I'm still still connected to Alexa. Right. Okay. 95 likes, guys. Let's get these likes to 100 likes. Let's get it to 100 likes, and then we're going to start this giveaway, okay, guys? A 100 likes. 4 more likes. Come on, guys. I know for a fact not everyone here has liked this stream yet. When we get to 100 likes, guys, 4 more likes, and then we're going to do the giveaway, okay? Let's get it, guys. Come on. 4 more likes. If you haven't liked the stream yet, go down and like it. I know for a fact. Oh, my days. There we go. 104 likes. That was quick. Nice. Okay, so W in the chat if you've learned something new, okay, guys? I'm about to announce the giveaway, but that's the end of all the market outlook. Sorry, not the market outlook. Sorry, my bad. That is the end of all this mastermind. These 3 lectures have come down to this very point. We're about to do the biggest giveaway I've ever done. Okay, all we need to do now is W's in the chat if you've learned something new, okay, guys? You know the score. W in the chat if you've learned something new today. Oh my days, this is crazy. W's in the chat, guys. This is crazy. W's, okay. Now, the giveaway, okay? It's bigger than a 50k, bigger than 100k, bigger than 200k. I've had a lot of requests for this, and it revolves around the rebuild, okay? As you guys know, I'm doing a complete rebuild on the course. The course is getting rebuilt. There's new features getting in. The course teaches you everything here. There's more things to this. It's not just this, but it teaches you everything you need to know. Then there's also the psychology, everything about psychology. There's also teaching you exactly how to get funded, okay? Step by step to a funded account. We also teach you how to do trade management and how to backtest. That's the new content coming in the rebuild of the course, okay? Now, there's also new features where all course members will get pre-New York streams. If you've watched my New York streams, you know that everyone here, or everyone on the stream, sorry, gets it for free. Everyone in the course is going to be watching the stream beforehand. So we do the stream 30 minutes before the actual stream starts. So 30 minutes before the free stream, premium members get a private stream, okay? There's also monthly webinars where we do actual content. There used to be weekly lectures, but we've changed it to monthly webinars now. There's also bi-weekly Q&A calls. So every 2 weeks, the whole group in the Fast Track Trading course will hop on a call and take turns asking questions to me on a call. Group call, everyone can talk, we all ask questions. So the new features are a massive upgrade to the course, new format of learning, new lectures, new modules, everything. Pre-New York streams, Q&As, monthly webinars, okay? And this ties into the giveaway. So to give back to you guys, because this has been absolutely mental. The hype for these streams, the views on these streams, the reactions to the streams, the results that people have been getting from the streams alone has been absolutely crazy. The support for the streams has been absolutely mental. Keep the W's coming, guys. So I wanted to give back to everyone, okay? Every single person has the chance now to make $150, okay? Every single person can make $150, okay? And all you need to do, okay, all it revolves around is this giveaway. So this giveaway is basically going to be giving you $150. Everyone can win. And all you need to do is just keep watching because I'm about to announce it, okay, guys? But that's what's in the rebuild, okay? There's so much new stuff in the rebuild, so much value. And it's just a crazy, crazy community. So much value, so much new content. So that's why I'm excited to announce that the giveaway, okay? Over the past 3 lectures, you've learned the tools, strategies to trade like an institution. But this knowledge alone will not get you funded. Consistent execution and advanced insights will. And that's why the Fast Track Trading course was rebuilt, to give you everything you need to know to go from learning to earning, step-by-step instructions from how to set up your charts to how to withdraw your first payout from a funded account, okay? Everything you need to know. So, So what's the giveaway? As a thank you for making these lectures a massive success, I'm giving you 70% off the Fast Track Trading course, okay? All you need to do is join for $150 now. It's $150, and then the price is increasing to $500, okay, guys? That's the giveaway. I'm so excited to announce this because just in time for the rebuild, I'm giving everyone a chance to get in for a massive discount before the new features are released, because the results that people have been getting are insane. There's been people getting weekly funded accounts, getting funded in a week, getting consistent results. Abby, I think she might be here. She's a perfect example. If you can dedicate yourself to this, you will succeed, okay? The giveaway is 70% off the Fast Track course. The Fast Track course is increasing to $500, okay? And all you need to do is join for $150 lifetime access. That's lifetime access to the stream, private streams, the weekly calls, the monthly calls, everything new that happens, you get $150 back, okay? That's the giveaway. This course has been completely rebuilt for 2025 with obviously the advanced strategy that I used, updated lectures, and new tools to help you trade with confidence and get funded. Now, take action before this ends, okay? Click the link in the description and you can join my course for $150. Let me just put the link there for 1 second. But guys, this has been absolutely crazy. I'm so happy to see the results that everyone's getting from these live lectures alone and from the course. But now is the chance to join for $150. You get 50% off, and then the price is increasing to $500. Okay? Everyone here gets a chance to join for $150. Okay, guys? I'm going to be putting the link down in the description in just a moment. So I'm excited to announce, guys, that is now live. The link is in the description. If you want to join the course for 70% off, $150, join now. This is only going to last a couple days, guys, not long at all. This is to give back to everyone inside this stream. This has been so crazy, guys. I'm so happy that everyone has learned something. People have been getting results from the lectures alone. This has been a crazy journey. The support, the hype, the love, the feedback, everything from this stream has been absolutely crazy. This mastermind has been absolutely mental, guys. I'm so happy to announce that you can join now for $150 using the link in the description. Okay, guys? And that's it. Okay? $150. And it's only going to last a couple of days. I'm going to stop ranting on about that now. But if you want to, there's your opportunity. That's the giveaway. The feedback's been absolutely mental. And yeah, it's been cool, guys. And that's it. Like, that brings us to the end of this whole thing. Still W's in the chat, guys. This is absolutely crazy. Yeah, guys, that's it. That brings us to the end of this mastermind. There is not much else to do. Join the course now before it's too late. I hope you've learned something from all these streams. Like, this is me giving back, okay? I'm giving back here. It's been absolutely mental. Here come the first few people joining, guys. Here come the first few people joining the Discord, joining the course. Who is this? It doesn't say the name. User. Here come the first few people, guys. This has been absolutely mental. Take advantage of this whilst you can. It's been absolutely crazy. Even if you don't end up joining, I'm happy you learned something. I'm happy you've tuned in for these streams. As I said, you don't have to join. This is for you. Here come the first few people rolling in, guys. This is absolutely mental, okay? But, yeah, like, as I said, you don't have to do this if you don't want to. But trust me, this is going to be a massive opportunity, okay? Regardless of this, enough talking about this, enough talking about the sale, guys. Join whilst you can. All I want to say now before we end this stream is that it's been absolutely mental. I've loved this. This has been crazy. The feedback, the support, the love. It's been amazing, guys. Regardless of the giveaways, just the education, the fact I've been able to teach people how to trade is absolutely mental. The success that people are getting just from the live lectures alone is crazy to see. And yeah, I'm happy to be doing what I'm doing. It's been crazy. And the next stream I do now will be the trading stream live, because as you know, I trade live every single day, completely for free. The track record is in my is a journal that I've got in the link in the description, okay? And yeah, I'll see you guys on the 21st of January for my next trading stream. But this has been crazy. I've loved this. I've loved doing this. Ever since I had the idea to do this, I've just been buzzing to get started, and I couldn't wait to get started today as well. But yeah, it's been nice to see the 100 viewers, the W's in the chats, the support people have been getting. Yeah, it's been crazy, guys. And if you don't take advantage of this, no problem, but do it before it's too late. Only lasts a couple of days, and I will see you guys on the 21st of January. Back to trading, back to normal. Now everyone's learned exactly how I trade. Join before it's too late, and I will see you guys on the 21st of January. Take care. Like the stream.